Well, first off, thank you everyone for staying until this last panel of the day. So I think as already introduced, our panel today is going to be focusing on interoperability. I think it's been a long journey for all of us who have been participating in this space. I think earlier I was at the main plenary session for Ecosperity, and in the concluding remarks, it was said that this is in fact the 12th year of Ecosperity. And looking back at this 12 years of what we've been trying to do within this space, what can we, I think, as part of this panel, credibly say to be a key part of the progress report? I think what I can say is that today is no longer a debate about whether we need carbon markets. I think it is recognized that carbon markets are necessary. But today the conversation is very much changing. It's really about how do we make sure we have the appropriate mechanism to ensure that the carbon markets are interoperable. And taking into account issues around corresponding adjustments, host country authorisations, registry, recognition, claims frameworks, double counting, cross-border enforceability. It is now a legal and commercial necessity to take into account these issues to make sure that carbon markets can scale with integrity and institutional confidence. I think the other thing to take note of, and I was very inspired by what Mr. Eric Chua said in his opening remarks, which is that, where does Singapore sit within all of this? And I think there is this great recognition in Singapore that when we talk about carbon markets, it's not just about the national market, but so much of it operates on the regional, operates on the global level, that the conversation here is not just about what we can do in Singapore, but really what sort of role can Singapore play in terms of one setting the examples for the region or internationally to follow on how we structure credible carbon markets. But also, I think, given where Singapore sits in the intersection of many financial and trade flows, the role that Singapore can very well play as a testing ground for a lot of these new ideas, concepts, innovation that we need to really scale this market. So Singapore is particularly well placed in this transition and in the development of carbon markets. Now, looking at all these issues, I must say that I have more questions than answers on how do we tackle this very important issue around interoperability. But I'm very pleased to have this panel of distinguished speakers who will be here to share their insights and experiences on what they're seeing both on the Asia perspective, but international perspective, and then from Peter, what ISDA is trying to do to try to bridge some of the gaps around from a product structuring perspective as well. Now, for all of you in the audience, hopefully as a reward for having stayed through all the way until this panel, I really encourage all of you to send in your questions to us and really challenge our panelists in terms of their perspectives on how we can make these markets work better. So I really look forward to receiving all of your questions. So first off, I think in terms of how we have structured the discussion today, the first panel was really about recognition of carbon credits, like how do you recognize it to make it investable and bankable. The second panel was about how do you resolve these cross-border disputes. Third panel was about unlocking financing, and now we're going to move into the legal topic of building the actual legal architecture for carbon markets to function efficiently. So first off, maybe I could pose the question to Boon Kiat. I think really looking at Singapore as this hub where at the start Mr. Eric Chua was also already saying that we're really looking for Singapore to become this financing hub for transitional finance, for development projects within this region. In terms of your perspective, having advised clients on this front, on the project development front in Asia, what are some of the trends, developments that you're seeing on from project developers in terms of issues they're facing around interoperability of credits and what they're doing to try to tackle that issue from a developer perspective?
Thanks very much, Elsa. And also want to extend my thanks to GenZero for the invitation to speak on the panel. Actually, it's been very enlightening so far because you have all the esteemed panelists have spoken so far, and also challenging, as Elsa has mentioned, because coming after that, as you see, a lot of the issues are interlinked, and as I'll also touch on during my portion as well. So, well, in terms of sort of the challenges that we see for project developers in Singapore and the region, because frankly, in the Singapore context, when we talk about carbon credit projects, we are actually looking outside of Singapore. Singapore positions itself as a carbon trading hub, as area for carbon credits to aggregate, but at the same time, it doesn't have the infrastructure and space for carbon credit projects. We generally then look to the region and across the world. Now, the key challenge for project developers, I'll then borrow the phrasing used by Mr. Eric Chua, our keynote speaker. Really, the 2 points we're looking at is trust and connectivity, and I'll elaborate on that in a little bit. In terms of the key challenges that project developers face, very broadly, and some of it has already been touched on by our speakers earlier, you're looking at considerations among financing, project design and structuring. In terms of local compliance considerations, you're looking at concerns with the registry, as well as host country authorisations. And of course, ensuring that you have a sufficient, credible, high-quality off-taker. So those sort of key considerations. I won't touch on the ones that have already been spoken at earlier panels, but in terms of interoperability and ensuring connectivity to markets in Southeast Asia and the region, the key, what I think is key, would really be that understanding or certainty as to the nature of the carbon credits and the ability of that carbon credit to move from the country of origin to the country of offtake. And in order for that to actually operate, then there needs to be, as mentioned again at an earlier panel, the international treaties or international agreements in place to safeguard the transfer of carbon credits across. Another thing that would be important that developers have to be mindful of would be in terms of the nature of the project and the credits that are generated under that project. Why? Because at the end of the day, the viability or the use case of the credit would really depend on whether you get a credible off-taker, a high-quality off-taker to take up that credit. Now, the market is slowly shifting in Singapore, but there's still very much a focus or concern with this reference to eligible international carbon credits, eligible ICCs, as compared to voluntary carbon credits you procure in the voluntary market. To give the audience some context there, in the Singapore market, the Singapore government has put forward, well, 2 things. One is they have entered into implementation agreements, international agreements with a number of countries. Currently, there are 11 that have been signed. That gives some assurance that for these countries where you're looking to procure carbon credits from projects in these countries, provided that certain conditions are met, then these carbon credits would be Article 6 compliant or fulfilling internationally tradable mitigation outcomes or transferable mitigation outcomes. So that gives some level of certainty for these countries. And the other benefit of these eligible ICCs, when they do come to Singapore, is that they can also be used for purposes of offsetting the Singapore carbon, a proportion of the Singapore carbon tax. So that gives, again, a certain additional value that's tied to compliance. So that based on that premise, I'll just kind of keep it at a very high level here. It then gives a certain perceived value as to this eligible ICCs, and if a carbon project is able, a project developer is able to put together a project that is able to get the relevant authorisations and be in line with the implementation agreement and an eligible ICC, then that credit gives a bit more certainty that that credit is of a certain quality, has been cleared or endorsed a certain aspect by the Singapore authority, and therefore has a certain value. Okay, that being said, at present there isn't any project that has been sort of approved or structured in the registry under the implementation agreements, and hence what we then look at for the market would be the principles and the framework that have been set out. in relation to the eligible international carbon credits, we look at what the Singapore government has done in terms of the procurement of nature-based carbon credits from 3 of the countries with which we have signed implementation agreements. And we then transpose those principles for purposes of procurement of voluntary carbon credits, or credits from other projects that don't strictly fulfill or meet the criteria for eligible international carbon credits. So that's sort of the space that we find ourselves in currently. And based on that, project developers then have at the least a certain framework or guidelines, certain guardrails, if you will, in relation to how carbon credit projects in countries that have implementation agreements with Singapore can be structured. And that lends itself also to structuring credits that may be of value in Southeast Asia. Because again, to the point of trust and connectivity, trust on the basis of when you meet these criteria, then the starting position or the assumption is that these are of a certain quality. They may not necessarily have been endorsed per se, such that they are recognized as high quality, but there is a certain expectation. If you adhere to these principles, there are certain standards, so that gives some parameters. Secondly, in terms of connectivity, Singapore positioning itself as a carbon trading hub. If the credits are tradable or being traded in Singapore, whether for own use or for purposes of sale to another end customer, then that itself also gives some form of credibility or some form of certainty as to the standard or quality of those credits as well. So I'll just pause there and maybe hand the time back to Elsa, because I'm conscious I took up quite a bit of time there.
Yeah, thanks very much, Boon Kiat, for sharing the Singapore and Asia perspective. Maybe just pivoting to Lisa then, because I think just recognizing that the markets in Asia is still, well, especially Southeast Asia, we're still developing. But if we zoom out and look at it from a global lens, I think perhaps there's much more learning points there are for us in terms of, well, one, what the issues are from an interoperability perspective, and then in your experience, what are you seeing? Are you seeing there to be more favorable environments for carbon markets to thrive in certain other regions? And then if not, then what are some of the issues you're seeing, and what's currently being done to try to tackle some of these issues?
Thanks very much, Elsa. And let me reiterate a point that you made initially, and that is the important role that Singapore is playing in resolving many of the issues that I will talk about shortly. And in particular, the intellectual curiosity and the courage that we've seen the jurisdiction take and have moving forward into, for example, issuing papers like GenZero's most recent paper on the legal nature, facilitating transaction structures and guidance that's very helpful to the market, and it's ideally situated to do so as basically a jurisdictional fulcrum sitting at the intersection of many key jurisdictions, but also as a subject matter fulcrum sitting between energy markets, financial markets, and environmental markets. So with that, we're seeing a number of issues arise. And first is pretty simple. What is it that we're trading? What is it that you're buying and selling when we're talking about a carbon credit? What is the fundamental legal nature? And so there are a number of processes that are looking at that very carefully. I mentioned the GenZero paper, but the UNIDROIT process is looking at that quite carefully, and a number of jurisdictions have pronounced upon that. The UK, for example, has issued a paper, and the Law Reform Commission has done some analysis of that. A number of other entities, including The Hague, are looking at very specific aspects of that as it pertains to how do we determine what the applicable law is when we transact these issues. And then the registries themselves are grappling with these issues when they look forward to what exactly can we do, what law is it governed by, and how do we treat what we're doing with these units? Can we in fact provide for security to be recognized through a traditional registry. And we see new market players like GCMU and others facilitate that type of potential structure that looks more like traditional financial markets. So that's a very significant issue. And I was thrilled to hear Joe mentioned the ICSID case, the Coke in Canada case. I have the fortune or misfortune, as the case may be, to be second counsel on that case, which we did not win. That really looked at was their property rights in carbon. And in particular, despite a very rich regime and jurisprudential tradition of finding property in similar tradable permits as they were then classified, the case didn't find consistently with that outcome. So really looking at a breadth of approaches whereby whether you classify it as a commodity, whether you classify a carbon credit as a financial instrument, whether you classify it as a tradable license or some form of permit, the bottom line issue is we need to find property rights that are enforceable in that unit. So this is really coming to bear in a number of contexts. So if I had to name my top 3 issues, the dispute resolution context, the fundamental legal nature of what it is, and the nuances of the classification of, hopefully, that property right would be my top 3.
Thanks, Lisa. And I think what you mentioned is very important. Like, so how do we recognize what's the fundamental nature of these credits, what are the property rights around it? And on that, I maybe wanted to then maybe pose the question to Peter from an ISDA perspective, because ISDA has been doing a lot of work in terms of standardizing the documentation to try to promote voluntary carbon markets as well. So every time I think about this topic, and I think to Lisa's point as well, I'm always trying to think of it from the perspective of what currently exists in terms of other commodities, how are carbon credits different from those commodities that exist. And then setting aside, I think there probably needs to be some convergence of laws and recognition around the nature of carbon credits to try to make these credits truly tradable across borders and across regimes. But until we get there, that's our wish list. Until we get there, what can private players be really trying to do? What can private financial markets be really trying to do? And I think the work that ISDA has been doing is really helping to steer us towards that direction. So perhaps you could share with us, again, from a perspective of how our credits, from ISDA's perspective, you're seeing it to be very different for actually what all these other commodities that already exist. And in terms of the standardization that ISDA is working towards, how are you trying to bridge and close off those gaps and issues so that we can still trade these credits while we're waiting for the international forums to resolve these differences?
Happy to. Thank you, Elsa, and thank you to GenZero for the invite. So I'm going to present the view of ISDA as a trade association that tries to produce standard documentation for OTC transactions in carbon credits and similar ones, but also at the same time has the function to provide certainty around the legal underpinning around trading of certain commodities, other asset classes, including carbon credits, emissions allowances, and the like. And so this comes from a secondary market perspective. So we're not talking about, in the ISDA context, about project finance and certain ways of structuring around legal issues. This is my long-winded way of saying that the issue that we've been talking about across 4 panels now, the legal nature is absolutely key for the derivatives market. There is no way around this. And without that being clarified across the globe, this will not help in, not solving this will not help in increasing the volumes of trading. And therefore not increase the use of standardized documentation either. So there's a very close link. So from our perspective, it's one thing to do the standard documentation that has been developed, and I can talk about that maybe later on, but without legal certainty and clarity around what the thing is that people are generating and trading further down the line across jurisdictional boundaries, together with other types of transactions that usually are documented under an umbrella master agreement. So therefore, the same legal certainty or the degree of legal certainty needs to apply to a carbon credit derivatives transaction as well as to an FX derivatives transaction, because that's what the whole trading relationship between commodity traders, financial institutions, and others is based upon. So again, without more clarity there, that's an impediment on the trading volumes, which is what we are seeing. There's a certain hesitation still in derivatives to go into much more trading because of these issues. In practice, that means, for example, the ISDA legal opinions that regulated financial entities require in order to prove to their respective home regulators that they can calculate the exposure on a net basis vis-à-vis the counterparty. As long as that is not clear, this will negatively impact the legal opinions. So we have various jurisdictions among the 93 or so legal opinions that address this point that are shaky on the analysis of what the thing is, if the thing is subject to insolvency legislation that applies to netting, which goes back to the question as to what the thing is, if you can take security over it, these kinds of things, they are not solved in every country. This jurisdiction here and a handful of others are a little bit clearer and certainly more certain around this topic, but the, say, 90 other countries that we cover have an issue here and there. And for the trading to work, really, we need the same degree of legal certainty in every jurisdiction that is part of this trading. And that starts with the project generating credits in country X, in particular in emerging markets, of course, which face lots of other challenges beyond carbon as well. So we try in our law reform advocacy, when it comes to the issue of talking to policymakers to create a capital market, to also think about the carbon markets. At the same time, they think about other types of commodity markets, currencies, interest rates, etc., because nowadays the framework needs to be the same, as well as the urgency to have capital market solution products and the like in around environmental trading is the same. But it's not all doom and gloom, I would say. So Lisa mentioned the UNIDRA project, which is key from our perspective in clarifying the issue as to what the thing is. From an insolvency, collateral, custody, etc. perspective, that's being done within UNIDRA. Singapore is one of the member states driving this, also at other fora, but the key project is really the one at UNIDRA because that's about substantive law. I'm not downplaying the significance of conflict of law rules, and by no means, but we need to know what the thing is in every jurisdiction, as I said. There's a lot of guidance available as to who regulates this type of trading. And again, from a derivatives perspective, it doesn't really matter if it's a commodity or security. That's a regulatory classification, really, as long as we know who regulates it. And the property rights are not dependent in most jurisdictions on what the classification is anyway. So that's only relevant in one or two major jurisdictions anyway. And then I think one of the earlier panels mentioned this, there's so much guidance available from multilateral development banks who clearly play a big role in this, and also for us as industry in convincing legislators and regulators to look into the ins and outs of when they make the policy decision around carbon markets, if that needs to be compliance or voluntary or both. There is no preference from our side, but there is a certain preference as to legal certainty around all of those. And then the final point I wanted to make is this, the discussion around the legal nature of carbon credits is a little bit of a bellwether, I think, for other types of environmental products that people want to see traded further down the line. The issues that we are discussing in the context of the legal certainty of the VCC project are the same as around renewable energy certificates, for example. They are the same regarding future products, if I can call it that, at least for derivatives. It's not a relevant product yet, but if you think about biodiversity credits, which are also supposed to be traded based on the relevant treaty, the issues there that the discussion around VCCs have delivered, that's the same. So if we don't solve the issues around the VCCs in a way that is helpful to the market, we won't have any trading in the future environmental commodity products either. I think I'll stop there.
Right. Thanks very much, Peter. I think a lot of the challenge we're seeing is really about, characterizing what the thing is. And I think it sounds like there are various ways of recognizing what it is, what kind of asset class it is as well. But at the same time, it also sounds like this space is also, in terms of the recognition, quite fragmented. And it's throwing up a lot of real issues. So maybe just again from Boon Kiat's perspective, when you're advising like investors into these projects or from a purchaser perspective, given all these, do you see this uncertainty around how to characterize the carbon credit to be a real hurdle to there being more financing for these projects, or more buyers being interested in purchasing carbon credits? And what are you seeing being done in Asia, or again, what developments are you seeing in Asia to try to tackle and overcome this?
Yeah, so uncertainty is certainly a key concern in relation to investments and into carbon credit projects as well as the procurement, because apart from the legal nature of the carbon credit, which I think has been highlighted at length, that is a key concern certainly, because it goes down to enforceability of the product or the thing that you are looking to procure or invest in. There are also other considerations in terms of the carbon credit by virtue of the nature of the credit. Unlike, for example, renewable energy certificates, which Peter touched on earlier, those are a little more certain, more viable, because if it's very empirical. This generator generates 1 megawatt, you get 1 certificate. For carbon credits, you're looking at a host of different factors in considering whether or not, apart from the legal character, right? You're also looking at the nature of what is actually being generated, the accreditation methodology that's being used, the location in which the project is sited, host country authorisations, local law compliance issues, what I mentioned earlier. So diligence, which was mentioned in an earlier panel, is something that is key as well in determining whether or not, or the nature of the project to invest in, and also to procure credits from. So that's one of the key issues. In terms of from a investor or purchaser perspective, because of that legal characterization and those concerns, what we have at the moment will be in the nature of contractual safeguards to be built into either the investment agreement or the offtake agreement to ensure that there are going to be certain safeguards or protections in order to preserve that investment, whether I'm investing and pre-purchasing these credits, or if I'm purchasing credits as an off-taker, what happens if the project fails? What happens if the credits are not delivered, they're unable to be delivered? What are the remedies that are available? It doesn't completely solve the equation. There are still going to be gaps because of that legal characterization in terms of, say, insolvency. But that's sort of where the market is landing at this time. At least that's what we see.
Thanks, Boon Kiat. Lisa, I really appreciate what you said earlier about the challenges that you're facing. I know in terms of, during our prep call for today's session, I think there were 2 points that you raised, which is one, conflict of laws, and then 2, freedom from prosecution being something, again, that's quite necessary to try to make these carbon markets interoperable as well. Maybe you could quickly touch on those 2 points too?
Yeah, I'm happy to. And in particular, the initial associated potential for conflict of laws starts in something that Kusha was talking about on the dispute panel. And it really is a fundamentally important document that provides for the stable legal basis of interoperable trading. And what we see now is the UNFCCC form, and I hope I don't get in trouble for saying this, but I'm going to be a little controversial, has lovely elements in it about reporting to the Paris Agreement under the Article 13 framework, the transparency framework. It doesn't have lovely elements in it that support commercial activity. And so the World Bank has come out with a new form with a schedule of very clear terms and conditions that are likely, no, that must be governed by local law. It is an instrument of a domestic government that is fundamentally anchored in their associated inventory of a form of natural resource, in taking the form of carbon. And then we go to transact, and the likelihood that we're transacting under local law is very slim. So we've got the letter of authorization governed by domestic law, and we have the vast majority of our contracts covered by UK law and New York law. So there's an inherent potential for conflicts. And then we have a third element. We have the registry itself, which operates under its own laws and articles of incorporation and constating documents, and it is the entity that issues the IT. And so I would encourage you all in the very short period of time in front of us to look at those UNIDROIT draft principles, which will be open for comment, to see how we've tried to walk the fence, thread the needle, any other metaphor you can think of for balance, those issues in the principles. And Peter, I'm pretty happy with where we've come out. I don't want to give a spoiler there, but the registry becomes very important. And the oversight of the registry by a potential country that is giving the instructions to issue the credit becomes very important. So that's really important in relation to conflicts of laws. And the second aspect that you wanted me to touch upon was dispute resolution?
The freedom from prosecution.
Safe harbors.
Yeah, that's right.
Very important. That take safe rules and safe harbors and positive lists of associated investments or types of projects that you can invest in without fear of prosecution is absolutely critical. We saw a spate, and it's a great war story. We act for a large global bank, and at the same time, in the same moment, they were being excluded from a US jurisdiction for being too green and exclusionary of types of investment, and being sued by an environmental NGO for investing in those same projects, which were very green, but happened to be done by an oil company. So how would a forward-thinking, sustainable bank navigate that situation without some semblance of clear rules around, is there a safe harbor that stops me from being prosecuted for taking appropriate action? Are there take-safe rules? If I actually buy a carbon credit and I go through a period of diligence and I think I have clear title and we find out a year later somebody comes out of the woodwork to claim title. And then last but not least, is there an Australian type approach where we have a positive list of types of projects that are eligible for use to give us that certainty that we won't be prosecuted? These are all really easy near-term wins that I think we'll see coming forward very shortly.
Okay. Thanks very much, Lisa. So I'm conscious we're running down to the last few minutes of our panel discussion and just going through the Q&A list. Okay, so we have this question here. So I think, again, we're facing an environment where perhaps the policymakers can be doing more to try to facilitate carbon markets. So maybe just turning the question to all our panelists, if each of you could maybe share that one or two things that you think is particularly urgent for policymakers to do to facilitate this cross-border, cross-region trading of carbon credits, but also what is realistic for them to do as well, given the time that we have. Then, I think that would help to shape the context. But there's all the things that us as private market participants can do, but there definitely is a catalyst that policymakers need to inject into the system as well. So maybe turning first to Peter, what are the 1-2 things that you would share?
Well, if I'm a country with projects and or ambitions in trading, definitely look at the UNIDROIT principles now, because they, to the extent your legal system has shortcomings, there's a lot of help in there, one. And then the second one is for any jurisdiction or the market generally, there are a couple of other issues that need to be dealt with in order to scale carbon trading further. First of all, regulatory capital treatment of carbon credits, earlier touched on the accounting treatment. And then there's a big issue in what we refer to as sort of financial market infrastructure. What is in securities markets known as a CSD, for example. Some of those functions might be helpful in developing the carbon market, or this aspect of the carbon market, into something better than just being a transaction log. So I'm talking about encumbrances and etc., proper regulation, etc., supervision. These would be my points, I think.
Okay, thanks, Peter. Boon Kiat?
I think from my perspective, one key concern would be that consistency or the understanding throughout different jurisdictions in terms of the treatment of carbon credits. So again, turning to, say, the UNIDROIT principles, having, say, oversight over the registries, something that gives a bit more credibility, a bit more certainty to the registries as well as the framework that governs. From the Singapore perspective, and I think this is something that a lot of off-takers, clients have been concerned about, would be if, say, there are certain projects that have been approved pursuant to the implementation agreements as eligible ICC projects, then that goes towards Lisa's point. Then you have an indication, a benchmark of certain projects that are, to a certain extent, safe, and gives a sense as to what the government has put forward as high-quality carbon credits, and the risk of being liable for potential claims then diminishes. And that gives assurance to the market, and hopefully not just in Singapore, but also to the region, in terms of the nature of, or the types of carbon credits in that particular range of projects that could be off-taken or traded in.
Thanks, Boon Kiat. And finally, Lisa.
Thanks so much. I have a list of 3, not 6, 3. The first is get a hold on what's coming into and out of your jurisdiction. So we have letters of authorization now, but there's still the possibility of voluntary market activity going on without the government having any knowledge of that, and the potential for double counting, double claiming, and worst case scenario, very poor chain of title. So letters of acknowledgement, so you don't find yourself in a position of having your credits expropriated down the way, are going to be very important. And that's a very easy fix. Secondly, of course, the legal nature, clarify that there are property or intangible property rights, preferably in these units. And third, last but not least, start getting the whole aspect of credits integrated into financial reporting. Sustainability reports are good and fine, they're lovely. This is an incredible either material risk or a material asset overarchingly that should be reflected in either the MD&A of a regular financial statement or some other aspect. And I think those are early and easy wins that we can facilitate for policymakers.
Thanks very much, Lisa. Perhaps just in conclusion, if I could sum up my key takeaways from our panel discussion today, I think certainly there are still, exists. There are hurdles that exist, issues that from a legal perspective we still need to unpack. I think the conflict of laws, fundamentally, what do you recognize to be the nature of a carbon credit as well? There are all these issues that while our esteemed panel of panelists are working through in their respective fields to try to help clients resolve. I think if we take a bird's eye view, it's still very important internationally and from a policy perspective for policymakers and international institutions to be able to resolve some of these issues and to give rise to this convergence that we really need for the carbon markets to be interoperable. I think until then, from a market perspective, I think what private markets are trying to do, we're trying to get the financial markets to provide the funding that's needed for a lot of these projects. Until we have this full recognition, how can we try to resolve the issues around the risk, liability, and the property rights from a contracting perspective at the very minimum, so that while the big issues are still being resolved at the international stage, we can still keep carbon markets very much alive and functioning until we can ride the wave of this next phase of convergence. So with that, I would please join me in thanking our excellent panelists for all the insights that they've shared today.